Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're in conversation with the management of Angel One. The chairman and managing director of the company, Dinesh Thakkar, is joining in. Thank you so much, Mr. Thakkar, for taking the time. And congratulations on a great set of numbers. This is ahead of expectations. So let's break it down first. The fourth quarter, you saw PAT grow as much as 30%. You saw net revenue higher by as much as 31%. Could you break this down for us? What was the major contributor?
We believe that we have to be focused on an area which is underpenetrated. So main focus has been to acquire customers from tier 2 and beyond who don't have an access to capital market. So main driver, I would say, is growth. If you see, are people who are coming from tier 2 and beyond. This quarter, we acquired almost 93% of this new client were from those pockets. So those are the main kind of drivers of growth. And majority of this revenue comes from broking activity and other income that we get by giving them some margin trading facility and all that. Last quarter also was a quarter where we rolled out our super app to 100% of our users. And we introduced a journey of mutual fund. So last month, that is March month, we saw we were able to get 43,000 new SIP accounts on our platform. So these are the main contributors, I would say, for this quarter, and main drivers which will remain for coming quarters also.
I see that you had 13 lakh of gross client additions in the quarter gone by. And that is quite significant when you say that a large portion of this came from the smaller markets. Is that a trend, Mr. Thakkar, that you see continuing? And do you anticipate that this addition, and you point out that this is underpenetrated, so therefore, do we see this kind of run rate in terms of client addition continue?
Yeah, if you look at this pocket from where we are getting customer, they are highly underpenetrated. That is one thing. And that forms almost like 75% of our population. So if you look at urban and tier 1, I think those are quite decently penetrated in terms of this financial services. But rest of this country, like 75%, what I'm mentioning, is very underpenetrated. And they have very less options. They have to come through only digital platforms. And there are only few digital platforms who have created journey for those kind of end users. So that is where we feel we are confident that this trend will continue. And in fact, it will accelerate from here.
Okay. The other metric, of course, that I was focusing on is the increase in ARPU, because I see that on a quarterly basis, your ARPU has grown to 427 rupees from 414 rupees in the previous quarter. And as I understand it, from the charge of broking or broking charges, the transition to a super app or a fully digital model is beneficial over the course of the life cycle of the client. Do we then expect that we see this ARPU inching higher in the new financial year? And what is the kind of scale up that you anticipate?
See, currently we are focused on population who is coming from tier 2 and beyond. And plus we are acquiring customer whose age is around 25. So those kind of people don't have a very kind of high per capita income, but they have a very kind of a bright future in terms of their career and all that. So currently our focus is not improving ARPU, focus is on acquiring those customers where future revenue potential is quite high. So we are not expecting this trend of ARPU to reverse, and neither we are focusing also on that. As I said, new set of customers that we acquire, ARPU from those customers is less. What we are focused on is economic metrics that we apply to every unit that we, every profile that we acquire. So unitized economy for those profile also are giving lesser kind of an ARPU is also excellent. So this time we had disclosed that our LTV to CAG is almost around 7.8x. And our focus would be how to deeply penetrate in those pockets where ARPU can be less. We are okay for people who can't invest big amount in equity market. But what we want to see, even a person who wants to invest like 1,000, 2,000 rupees also, for them our platform should be available to invest. But as we acquire this new set of customers, challenge would be how to make them profitable. So our focus would be on cost to revenue ratio for per unit. If you are able to achieve that, so we would be okay expanding the market rather than focusing on increasing ARPU at this point in time.
But let's talk about that a little bit more, because that side of the table, in terms of the costs and acquiring new customers, that's the challenge in the business that you're operating, because it's a very, very competitive market, and you are clearly spending on marketing and creating awareness of the app that you're creating or you've rolled out. What kind of trends can you tell us about, or what kind of goals that you have set can you tell us about in the new financial year as far as those spends are concerned?
Yeah, one, we are not going to reduce our spend. We would be accelerating on our spend.
Okay.
Second, we would be accelerating on our brand awareness in those pockets.
Third,
which is most important, we would be focused on having a proper economy, unit-wise economy, where whatever we spend, we are able to recover from that cohorts that we acquire. So those are the few parameters which are guiding us in terms of gaining more footholds in an area where this market or access to this market was not available, or access to broader financial service product was not available. So metrics would be always like business consideration plus deep penetration in those pockets where our competition have not been very successful, have not been able to reach there. So we are working on optimizing our journeys in terms of using machine learning, artificial intelligence, so that we are able to acquire customer at a very kind of like reasonable cost, and we are able to make them active also at the same time. So we are spending a lot on content, on awareness campaigns and all that. So that becomes a part of our cost, and we check what revenue we can generate from those cohorts. So we are focusing more on lifetime value to cost of acquiring this customer and serving this customer.
So at least, I mean, what I'm gaining from that is that for at least a while, possibly this financial year heading into next, marketing costs are likely to be relatively elevated. I want to focus on the broking business. You pointed out that F&O is a space that you're very focused on. And in fact, it's evident in the numbers as well, because I see that the share of the F&O segment in the gross broking revenue has increased to 87% in the quarter gone by. That's quite substantial. And that compares to 82% from the third quarter. Is this the new normal? Do you see this inching up even further? What is the impact for the business and for the operations?
Yeah. If you look at India now, people are quite young, so they are ready to explore new ways of gaining kind of like profits from momentum in the market. So usually what happens is youth, they are very social media kind of like savvy. They check what are the market trends and where people are making money. And because of their low ticket size, they want to replicate momentum of Nifty, say. They would like to take options of Nifty. They would like to take options of Bank Nifty. So that's the reason at their entry point, what they're doing, they're buying options, not just to hedge their position, but to replicate or mirror the momentum or the trend of indices. So that is where we are seeing that, as I said, that new customer that we are acquiring is youth and is from tier 2 and beyond. They are mostly starting their journey from F&O. Not that they don't want to go into cash market, but because of limited ticket size, they enter through option market. In option market, you have to categorize this into two parts. One, people who use Greeks and positions, like taking positions in option to hedge their position. Second is entry-level youth who wants to enter the market, wants to gain a better kind of like profit by using these tools. So that's the reason we are seeing this here. Youth is using this option, but they are the one who would shift towards long-term kind of like wealth creation by using cash market, by using portfolio approach, by buying ETFs and all that.
Mr. Thakkar, one aspect, and there has been a little while to kind of get used to this, but the SEBI regulations on the margin, what are the implications for the business in terms of cost? Working capital, I would assume, would go up because you have to be able to provide that cash where required.
I think you're talking about upstreaming what SEBI has proposed.
Yes.
So that will get into impact by this second quarter of this financial year. So upstreaming of client fund is allowed in the form that they are giving us. We can upstream FDs, we can upstream all collaterals what they give, but only like we have to get more capital to sustain and maintain our bank guarantees and all that to our fund. So we have to raise more capital. Impact of that raising capital would be around 40 crores on our profit and loss. Already we have disclosed that in our quarterly presentation. So that's it. Apart from that, there is no kind of this life as normal. Nothing changes. In fact, this will create more safety for retail investors because all their assets now are lying with some kind of like clearing corporation or depositories. So we believe that whenever this kind of steps have been taken, where regulator has made this marketplace more safer for retail, we will see increase in their participation. So the small increase in cost would be offsetted by increase in participation from retail segment.
Now, I would think that, and correct me if I'm wrong, if I'm reading this correctly, but in a situation where an individual trader is unable to have that kind of a margin, 50% cash margin for a trade, for that margin trade, you would have to provide that. A lot of brokers are charging an interest on that, but there is a requirement for having a slightly larger amount of capital pool available in the instance where you have to provide that. Do you think that that could be a challenge operationally for the smaller brokers? Do you see more consolidation taking place?
Nothing changes. It is life as normal. It used to be their priorities. Upstreaming does not have an impact on this kind of like margin segregation and all that. That phase already it is behind us. So I think that impact would be raising new capital to sustain and maintain bank guarantees and limits. That would be having some impact. Apart from that, I don't see a big kind of like increase in cost, which I think easily every broker can absorb. Because there are huge margin. If you see margin in this industry, it's quite huge to absorb all the small costs.
I'm curious about the market share in the individual segments that you're playing in F&O and cash, because you have gained quite substantially in F&O. So what is it standing at currently? And what is the goal in terms of expansion? Because ultimately, this is going to be a game of scale.
Yeah, you're right. Being a digital player, our focus would be to be like a top player in this segment. And when you look at digital players, no, I believe there will be place only for 3 to 5. So person at the top should have a market share of not less than 30%. So our aim should be like, if you want to be number one, we need to gain market share of 30%. When I say 30%, it has to be in new acquisition of client. It has to be in revenue. It has to be in active and NSE active customer base. So our focus for this year would be to achieve maximum market share so that we are able to sustain our pole position.
Where does it stand at now, sir?
Right now, in terms of active customer base, we are number 3. In terms of revenue, because people like our competition are not listed players, so we don't have insight in terms of their revenue. So, and in terms of incremental kind of like market share or market share in incremental client, we are number 2. So we are crisscrossing between number 2 and number 3 in certain areas.
Understood. The challenge that is posed by discount brokers, I think it's been spoken about quite a bit, and you've been asked this question quite a bit as well. You've stated that it is your intention and your goal to be number 1. But there are players in the market that are starting to offer discount, services that they hadn't done previously. How do you see this landscape changing? Do you yourself feel the need to change the offering that you have?
I think we are constantly changing since 30 years. So nothing new for Angel to take new challenges and spot new opportunities and be relevant to current market conditions. So there is, as I say, that space for 3 to 5 players. Definitely at any given point in time, there would be 10 players who would be really competing to get to that position. And we are one of them. So it depends on like who gets it right. So what we are saying that we never will sit complacent in terms of what position we have achieved. We would always see there is a headroom to improve from where we are. So that is how constantly Angel have been transforming and improvising their market share.
Finally, 2 legs, I think, available for significant growth. One is what you've already pointed out and the penetration that you intend to achieve. The other is inorganic growth and consolidation in that way. Is that something that you will consider?
Yeah, we are open to opportunities which can help us to reach a position that we want to achieve. Not just number one over here, we want to be a trusted fintech type of like company. So we are looking out for ready-made components. Why do we invent a wheel where somebody has really worked out some solution which can be plugged in our app? So we are open for that. That's the reason we have appointed one more executive director who would be looking at strategic initiatives, Amit Mujumdar.
My final question, I said that was the last, but I just thought of one more. You mentioned mutual funds and you mentioned SIPs. I just want to get an understanding as to how the super app is expected to bring in revenues from other streams, insurance, for example, or mutual funds. And also, I believe that there's a plan to roll out your own mutual fund. What's the status of that? When can we expect that?
Yeah. So our completion of super app has been done. So it is rolled out to 100% population. And this was arguably one of the largest kind of migration of app. And last quarter, we introduced mutual fund journey, but that was direct. So it will help us to expand lifetime value of a customer because they will stay invested with us for other needs. By last quarter of this financial year, we are planning to introduce getting into lending business, unsecured lending. We will be distributor. So that will provide lots of revenue for us, but maybe not this financial year, next financial year. Insurance business would be mostly driven by B2B channel because insurance products are not fully digital. And we don't want to get into an area where it is physical relationship managers and all that. But that we leave it to our B2B channel. We have a huge channel for that. So these are the few areas that we will focus to increase our revenue. That is lending and broking business. Insurance, whenever it becomes digital properly, we would like to scale it up. But currently, we are happy with whatever products and channels we have for insurance business.
Any last thoughts on growth targets for the new financial year? Have you set any benchmarks for yourself?
We don't give kind of future numbers and all that. But what I can say is that this was the most challenging year, past year. And in that also, we were able to achieve a good growth. I can just see that, okay, our economy is going to be back on growth track. And our industry particularly will see more demat account coming in. Market will be far more better, favorable to investors than what it was. We are expecting a better year coming forward for industry. And as we are targeting to get more market share. So we can say the year would be positive for us and for industry.
Fantastic, Mr. Thakkar. Pleasure speaking with you. Thank you so much for taking the time.
Thank you.
Viewers, that was Mr. Thakkar of Angel One. Do stay tuned. Lots more coming up in just a bit.